Yeah, now we're talking. Back in the action once again. Boy, it feels great to be back with you guys and gals here this evening. It might be a gloomy day behind me here in Los Angeles, but that's not stopping us from having a great day in the markets today. I hope you guys had a great hump day. We're back in the action, rolling our sleeves back up. We got more opportunities coming tomorrow, and of course, it's Wednesday evening. It's May the 8th, 2019. My name is Joseph, by the way. And this, of course, is your nightly newsletter. Now, don't forget, guys, I help traders find reliable, predictable, profitable, high-quality trade setups using a simple three-step trading strategy that we teach and trade together every morning in our trade room. You know, we all know there's life-changing opportunities every morning at the opening bell, and my job is to help my clients get some for themselves. And don't forget, guys, we're going to cover oil, S&P, Nasdaq, gold, and euro in the video tonight. I'm going to jump into oil first of all here this evening because oil is once again a kind of a wild session today, but it's all about how the day finished into the close. Let's grab that black gold, that Texas tea, and let's take a look at the chart here tonight, and we'll put together the plan here in tonight's video newsletter. First of all, you can see here quite the rough and tumble day here, right? But there is an overall bullish trend to this market right now. So we got to give the bulls a little bit of the edge right now. Not a lot, but definitely there, right? You'll notice I found this channel here, right? So we definitely see we have the bulls, right, in firm control of this market. Most important thing, though, is right where we finished up the session here. Now, I talked about this number last night on the newsletter, 6186. What is that number? Why does that number ring a bell? Well, that is last Friday's close. And so, of course, we went up, we went down, right? We did a little bit of a wiggle back and forth here, and we are right back where we finished the week last week before, right, this whole China-U.S. trade talk debacle and the falling out earlier this week. The bottom line, though, is we finished the session off inside of a range. The range is the big clue. Forget about the 86 level for right now. The range is the big clue. Nice big bull momentum going higher into a trading range. And what does that tell me? Trading ranges tell me to look for trading opportunities below the range, above the range, and because this is a bullish momentum, I have a different buying opportunity below the range than I do above the range. So tonight on the newsletter, I'm going to talk about how I have this bull market into a trading range. I want to buy low, I want to sell high, and we'll talk about the right patterns to buy low, and we'll talk about how to sell high. Now, obviously, right, I'm also going to give you guys a heads up on what it takes to get a breakout, right? So what does a breakout look like going higher, and what would it mean to be a breakout down? What's the best way to trade those scenarios? We're going to grab all of those details and a lot more coverage on the oil here tonight on this video. Over on the S&P and the Nasdaq both had relatively choppy, sloppy days today. But much like the oil, you can see those bulls have that just slight edge right now. And we'll go into a lot more detail about what's going on in the bears' minds in a moment here. But you can definitely see, right, that rising support trend line is held nicely most of the day today. And of course, right, combine that together with the channel. Anytime I see a well-behaved channel, right, those channels always tell me exactly what patterns to look for to buy below the low, but more importantly, those channels tell me exactly what to look for if we break through that high. So this channel right now on the S&P is the big clue. It tells me I can buy below the low, I can buy above that high. I'll also talk about, right, what it takes to be a seller off that high tonight on the video as well. So buying low, buying the break higher, because I'm not sure if you guys look left yet or not, but there's a whole lot of open space overhead here, right, if those buyers can get on their horse. I'm going to talk about all of these details. The channel is the most important thing we're watching here for the S&P right now, and we'll break the plan down in a lot more detail in just a few moments. Over on the Nasdaq. And the Nasdaq, at first glance, it looks very similar to the S&P. In fact, I almost missed it myself when I was doing my ongoing prep work here. But there's one huge clue right now on the Nasdaq that the S&P never got. And that is this double bottom right there. Why is that double bottom so important? Well, you'll notice the S&P didn't get that double bottom, right? The Nasdaq, that double bottom, anytime I see a strong move into a double bottom, what do we look for? Ranges. Yep. So range is going to be the name of the game here on the Nasdaq in tonight's video. Now, what does a range tell me? A range tells me I can buy low. It tells me I can sell high. right? But here's the problem, though. You'll notice these sellers don't seem to be having any luck selling off that high. I think there's a reason for that. In fact, I think there's two reasons why those sellers haven't really had much success, right, selling off that high yet. We're going to talk about why those two reasons are in play and what they mean for us tomorrow. And of course, we'll also talk about, right, how I want to sell off this high and I want to buy off this low. We'll talk breakouts, we'll talk fading those breakouts, and we'll talk everything in between here tonight on the Nasdaq. But very big differences, though, tonight between the S&P, right, and the Nasdaq. They're sloppy, choppy charts, but two very distinct differences on those charts. We'll put the plan together on the NQ in just a moment. How about that gold? How about that gold today? Well, we talked about this last night. We knew we had some news in China, and we get some more coming tonight as well. But we knew we had some major news overnight early in China, and that's what got things really jumping here in the overnight. But you'll notice it came crashing right back down again. Now, there's a lot I could talk about on this introduction right now, but there are two main components. One is this strong bear move down. With this strong bear move down, you know what I always talk about, right? What do we always look for whenever we see a strong move? If you don't know the answer to that, you better stick around for the full analysis on gold. So strong move down tells me very, very specifically what to be looking for tonight, or tomorrow morning, I should say, on the gold. But if you know the answer to that, I also would encourage you to remember there's also a range down here, right? And we're right down around this range here. So I've really got two plans on this gold here. I have a short-term plan and I have a long-term plan, right? Or medium-term plan, I guess you would say, because the range tells me to buy low and sell high, right? This strong move down tells me, well, I'm going to make you wait for that one, and we'll dig into this a lot more detail here on the gold. So strong bear move into a trading range. Usually that's enough to put the plan together. If you don't know the plan, though, I'm going to cover the whole thing tonight on the gold market. And, of course, we got the euro. Right? Chugging along, slow and steady as we go. Still waiting for that pullback for the buyers. This is why most of the reason why the market's so darn slow right now is because nobody wants to buy this area, right? Would you want to buy up here? Yeah, that's not a very good spot to be buying up here, is it? And of course, we spent most of our time today riding into that level of resistance. So if you're a euro trader right now and you're staying patient, right, I'm with you. We've got a great buy zone here. Same thing from earlier on in the week, right? Get a trading range, bull bias to it. I'm looking for buying opportunities below the low of the range. And remember from last night's newsletter, we get a lot of concern about one thing about this range, right? We'll talk about this tonight as well. And then obviously, if we can go higher here, I'm looking for a very specific pattern going higher, right? I want to buy low. I want to sell high. This bullish bias, though, gives me reason to think we might get a chance to trade a breakout tomorrow as well. So we'll talk about how to buy those breakouts. We'll talk about how to sell the failures. We'll talk about all the details here tonight on this mighty euro. Well, we're all locked and loaded. Another great day in the books. We're getting ready for tomorrow. Before we jump into the gold, the euro, the Nasdaq, the oil, the S&P, I want to remind you, make sure you never miss another great newsletter video. It's really simple. Join our mailing list, and you'll be the first person to get an email from me every evening when the nightly newsletter goes live. Just before I hit the publish button on our YouTube channel, moments before I publish it to our blog, I send an email out to all of our subscribers to let you know now is the time, right? The newsletter is live. It's very, very easy to join. All I need is your name, your email address, and then hit that subscribe now button. And don't forget, when you subscribe and join the list, your job's not done yet. I'm going to send you a welcome email, and make sure you check your email. And don't forget, sometimes those emails, they get stuck in your spam folder, junk folder, promotions folder, right? Whatever random folders they're using these days in Hotmail, right? Gmail, whatever you're using for the free email services that you guys love to use. So if you're joining up on the mailing list, make sure you check your inbox, check your spam folder, check your junk folder. A lot of the emails I send out get stuck in those promotions folders. So make sure you get the good stuff there. Join the mailing list. And then, I need one more thing from you here before we jump into those charts here for tonight. I need your help. I'm always trying to make this the very best place to learn and earn on this nightly newsletter. And I need your help. I need some feedback. What's your favorite market, right? How do you use the newsletter? Right? Do you go right to your favorite market, or do you watch the entire thing? Do you watch it the night before, or do you watch it just before you trade? Or maybe you're one of those crazies, right, that watches it 3 or 4 times throughout the day. I love folks like you. How do you use the newsletter, right? Let me know in the comments section below, because I'm always trying to give you more of what you find the most amount of value in. And also, while you're down there, don't forget, while you're giving me some feedback, right, give me a thumbs up on the video tonight. If you watch this video every evening, if you find value, right, in all the hard work we put out here tonight, always on this nightly newsletter, give me a thumbs up in the video, subscribe to our YouTube channel, hit that bell icon so you always get notified whenever we publish something new. And don't forget, if you have any questions, you can always pick up the phone and call that toll-free phone number. I realize that most websites these days are all call centers and chat bots and automated robots and spam and stuff, but I'm old school. You call that toll-free phone number. I'm going to answer the phone, answer all your questions. That way you've got the right information without wasting countless amounts of hours, right, searching through Google, because as we probably have already learned, right, a lot of the information online these days, right, is inaccurate. So call me if you have any questions about brokers, data, charts, membership, free trial, right, things like that. All right, guys, great to have you here with us. Let's jump into our material here for tonight. Now that we know the introduction, what's the schedule looking like for tomorrow? Tomorrow's Thursday. It's May the 9th, and as I mentioned earlier on in the week, the next couple days are where we really start to get the meat and potatoes for this week. We had that, right, those pretty much blank, empty days here, Monday, Tuesday, and Wednesday. The news regarding the U.S. and China trade talks, or the falling apart of the trade talks, right, really was the main headline the first 3 days of the week. But as we talked about earlier this week, the dust now begins to settle just in time for some big scheduled news reports coming out later on in the week. Now, first of all, if you're in Asia or if you're in London, we've got the final round of inflation reports coming out from China tomorrow morning. Well, I guess it would be overnight for us, right? But usually about 2 o'clock, 2:30 Eastern time, right? Well before I get up in the morning here in Los Angeles. The bottom line, though, is 2 o'clock, 2:30, 3 o'clock Eastern time. If you're in the Asian session or you're trading the London session, be aware you've got some big inflation numbers coming early tomorrow from China. And remember, whenever we talk about PPI, CPI, PMI, right? Any indexes, right? These are all inflation numbers, right? Anytime we talk about inflation, we always think what? We think currencies, we think metals. So if you're a euro trader, right, watching euro tomorrow, right? Gold trader watching the precious metals tomorrow, inflation, right? So we're definitely keeping an eye on those metals and those currencies in the Asian into the London session. Those should be hopping for you early in the session. If you're with me tomorrow in the trade room at 8 o'clock Eastern time, we open up our trade room every morning at 8 a.m. and we trade together until 11:30 Eastern time, Monday through Friday. If you're with me tomorrow morning in the trade room, right, we get a bunch of news tomorrow here coming out at 8:30. I know there's that Jerome Powell speech at 8:30, but don't worry too much about that. This is not his testimony. It's the testimony you got to worry about, right? If you look further into that speech, he's speaking at some conference in Washington D.C. So I don't expect that to be a major market moving event, but I do expect, though, the international trade and the PPI numbers tomorrow to continue what the Asian session picked up on for metals and currencies. So we're definitely looking for some action tomorrow in the currency markets, in the metal markets early in the session. And then I would imagine tomorrow for markets like the Eminis, the Nasdaq, the S&P, and of course oil, tomorrow's really going to be a day where I think we kind of figure out how this market is really processing this news of the, kind of falling apart, right, of this U.S.-China trade talks. Because from what we've heard so far, the trade talks have kind of broken down. We saw that big tumble, right? We saw the next leg on Tuesday, and then today we kind of chopped up a little bit, right, with a slight bull bias, which we'll talk about in a moment. So I think as far as the Eminis go tomorrow's going to be a day where are we going to get that next leg lower, or are we going to get that big rally higher? And I really think we get a great opportunity tomorrow for some nice big moves in either direction. And of course, we'll put that plan together tonight, right, in tonight's video. So news overnight in Asia, news tomorrow morning in the U.S. morning session. Now that we got the schedule under control, now let's dive in and take a look at these charts here. Got a lot to cover here tonight. We got oil, S&P, Nasdaq, gold, and of course we can't forget about that, right? That very active little fella, right? The euro. I'm kidding with you, obviously. But bottom line is we'll cover them all here for us together. Now, over on the oil, starting off with oil. First things first, who has control of the short-term momentum? The bulls have control of that short-term momentum. That tells me I want to find levels of support to be a buyer, right? I want to buy at levels of support when I have a bullish momentum in the market. Where could I find levels of support? Well, this is where I like to use those hidden channels. I'm going to draw a trend line off of those lows, and I realize that, most folks would draw trend lines like this, and they would, probably call that your channel like that. Yeah, that might work. That might have worked a couple of years ago, but in today's markets, though, you've got to be a little bit more crafty with your technical analysis. So instead of finding support levels, I actually look for resistance levels first. So if you're kind of looking for what's the best way to find a level of support, find a resistance level first, right? Like this one here, and then bring it down. Now you'll notice I'm kind of being a little bit loose on that low here because you want to get those bottoms to hit, right? You wouldn't want to draw that down here because you only got one touch right there. You want to look for the most number of touches, right? 1, 2, 3, 4, and of course that confirms that low. So that gives me the overall, right, the overall support level here now that I really want to be a buyer off of, right? There's one great support level there. How about another support level? The second big thing here is this trading range. Now, how does a trading range give me support levels to be a buyer at? Well, good question. I can actually take the size of that range, believe it or not. I can take the size of that range, right? I can copy it and paste it down. That creates support. Copy and paste it down. That creates support. So literally, you can literally take that rectangle, copy and paste it, bring it down, copy and paste it, bring it down, right? You can see it's relatively easy once you learn the technique and you have a range. So we're talking about a bull market right now. I want to be a buyer. I want to buy at support. Well, there are two levels of support, 61.60 and 61.35. And sure enough, look where they line up. They line up right around that same spot of that channel. Now we're talking. Now we've got something we can use, right, to be a buyer. But what's the best way to buy it if it pulls back? Because remember, not every pullback is going to be a bounce off this, right? It could go right back down to that low. So how do we buy off of this? How do I get long off of that low? Great question. The first thing is I want to see us try to make that move lower. Once I see the sellers try to take the market lower here, now I'm going to look for the bears trying to sell into it. See, at this point now, right, much like we saw back here, much like we saw back there, right, this happens all the time. It's a bull market. The price shoots lower for whatever reason. I'm not going to bore you with details on that. Doesn't matter, right? And then we see sellers try to sell off the moving average. Right? We saw it back here. Shoots lower. Bears try to sell the pullback, and what happens? They fail. They get stopped out, and the market runs higher. Right? Did it again. Price shoots lower. Okay? Sellers try to sell off the moving average. What happens? Yeah, they fail, and the price runs higher. Right? This happens all the time in bullish markets, right? You wouldn't do this in a bear market, obviously, just in a bull market. So I know now if I can get that pullback here, if I can get that pullback now, get those sellers here, same thing as before, to try to sell off that moving average now. Now I know exactly where their stops are, and I can look to buy right into those stops. A very easy setup. It requires no special tools. If you've got charts, you've got real-time data, you've got a moving average, right, which you'll learn all about in our free trading course, which I'll mention in just a moment. But once we get this, right, this strong move higher here now, right, once I get that strong move higher here now, I don't want to chase after it, right? I don't want to buy high. So what I'll do is I'll wait for the market now to pull back, and I'll buy it there, right? Here are two very easy patterns to learn, right? One's called a failure pattern. The other is called the breakout pullback pattern, right? Breaks up and pulls back. Okay, now another pattern I like to use in these types of environments, if you draw a trend line down overhead, you can also use that trend line as a level of support, right? So I'll be keeping an eye on that trend line as well, trying to use it in combination with that failure pattern. We call these two-legged pullback patterns, right? Because of the 1 and 2, right? That's another pattern I'll be watching for, right, down around those lows. So that's pretty easy, right? If market pulls back, want to be a buyer here with failures, two-legged pullbacks, and breakout pullback patterns. But what if the market runs higher, right? What if it runs higher? What can we do then? The problem if it runs higher is I'm running right into a measured move, right? That's one big problem. And the other thing is, right, is I've got a range. And anytime I have a range, I can add levels of resistance overhead. So I got to be careful. As the market tries to go higher here, the last thing I want to do is buy high because I'm buying into resistance. I always want to try to buy off a level of support. But if we do see the market jump higher here, there are two basic patterns I look for. One is called a two-try breakout. Look for a strong break higher. In this case, I want it to push through that measured move. Very, very important. We see a nice strong push through the measured move. If I can get through that measured move, now I look for one of two scenarios. Either one is going to be that 1, 2, go. I call this a two-try breakout pattern. In other words, as the market goes higher here on strength, confirms through the measured move, the profit takers try once, the short sellers try twice, and I'm looking to buy right into those stop losses, right? I call this, by the way, the two-try breakout because obviously it breaks higher, let them try once, let them try twice, and then we're buying right into those stop losses. Now that's the most aggressive one. Okay, that's also going to need to go through that measured move. But what if we don't go through that measured move? If we don't go through the measured move, then you've got to wait for another leg confirmation. What do we call these? We call these 1, 2, 3 breakouts. Because what you want to look for is 1, strong move up. 2 is a pullback to the moving average. Remember, I don't want to buy that pullback, though. I don't want to buy that pullback because you're buying right into resistance at that point. But then once we see it stretch its legs, though, now we know we have something we can work with. I'm going to mark up that high. I'm going to mark up that high. I'm going to bring it down to that low and find the hidden channel, right? And that hidden channel will give me exactly what I need here, right? Multiple levels of support to buy off of. Remember, as a professional trader, right, we're buying at support. We're not buying at resistance. So that's the big reason why I want to be a buyer down here, right, at support. If we run higher here, I've got to see either a strong move up, 1, 2, and go, or I've got to get that up, back, and go, grab that hidden channel, and I can buy it from there. Now, what if we don't get it? What if it goes up? Could we sell this thing back down? We definitely could. We just need the right pattern. Because we're bullish, we have to make sure we wait for a little bit more evidence the buyers are failing. So again, because the overall move is bullish right now, if I go higher here, if I try to use the same failure pattern off of that low, right? See, going with momentum, that's going to be a 75, right? A 75% plus type pattern right there. That'll be a nice, highly reliable pattern. We're not talking perfect, but we don't need perfect, right? We're here for profit. And I know if I consistently take 75% patterns, I'm going to make the profit. If I try using that same basic pattern off the highs right now, that will probably closer to a 35 or even 40% winning ratio. Not good enough, right? Not good enough. We can do better than that. So what I want to do is I have no problem being a seller up here. I just got to remember I need to see a little bit more than just a buyer failure. So as we go higher here, the buyers are in control, right? Now, how many times, if you were a buyer, would you try to buy a pullback? I know what I would do. I would try to buy it once, maybe at the 38.2. Then I would try to buy it again, maybe at the 50% pullback area, to kind of give you an idea of kind of what those levels will be, right? So you imagine, right? We go up here, the aggressive buyers, they buy the shallow pullback. The more conservative, right, gray-haired buyers, right, they're all worn out from being too aggressive. They say, nah, I'm going to buy the deeper pullback, right? Once we have both those buyers buying once, buying twice, yes, now we're a lot more comfortable now selling back down into that trading range. All right, guys? What do we call those? We call those nested failure patterns, right? Nested, the term nested coming from those, those nested dolls, right? Those Russian nested dolls, right? Which fit inside of each other, right? It's a failure inside of a failure. All right, guys? So we're definitely looking to sell off that high, but we have to get the right pattern, right? That way we can get the odds we want on our side. All right, guys? Now, what about the sell side going lower, right? Sell side going lower is a bit tricky. You got to remember, the bears are trying to get down to that 60, 66, right? The bulls are trying to get all the way up to that 95. So we know where we're trying to go for the bulls. We know the plan for the bulls. For the bears, how do I get short down here? I'm looking for that same basic pattern. 1, 2, 3. 1, 2, 3, breakout. Mark up that low, mark up that low, up to that high. You'll notice where I draw it from. I draw it from the big high, not the recent high, and now I know where my sweet spot is, and I can sell. Bingo. I can sell off that sweet spot. Perfect. Target is down to that 60, 66. All right. So now we've talked about 1, 2, 3 reversals, or 1, 2, 3 breakouts, failures, nested patterns, pullback patterns. Boy, we've covered everything, even two-legged pullbacks here. And I have so much more I want to share with you guys. So I want to keep going because obviously we got a lot to cover in this video. But if you want to learn all my favorite patterns, learn all about our 3-step trading strategy, I would definitely recommend a much deeper dive. And to do that would be our free trading course. I'll put a link up there in the upper right-hand corner. I'll also put a big red button down here right below the video tonight on our blog. If you're a new trader and you're trying to learn the most important fundamentals so you can make money early in your career, right? Or maybe you're an experienced trader and you're trying to break some bad habits and you're just sick and tired of all the indicators that don't work and you want to actually learn how to read a chart, that free trading course is going to be great for you. Great for all types, right, of traders. So what I do every day with my clients is I help them make sense of these markets, right, using a simple 3-step strategy. So learn more about that strategy in the upper right-hand corner. Grab that free course. In the meantime, let's keep this party rolling here right now with the S&P. So the S&P, of course, probably the ugliest, right, or maybe not the ugliest, right? We saw the S&P and the Nasdaq were pretty choppy here today. It was definitely a two-sided market. And I think what's most important thing right now is who has the short-term momentum in this market. And right now, I'm not going to say long-term, right, but we'll say short-term because long-term, you look left out here, you can easily see, right, long-term here right now, these bears definitely have that edge in the long-term. Right? But in the short term, though, today, the bulls did a great job at holding this. That's why I said in the introduction, I think you're going to see tomorrow will probably be a day where we finally kind of shed a lot of this stuff off and start to see what this market really wants to do, right, going into the, dare I say it, right, into the summertime season as we get into the end of the month of May. So we know we're looking at a bullish overall momentum right now, right? Higher highs, higher lows. It's not just the higher highs and the higher lows. It's the way the market reacted every time it went below the moving average. Every time it goes below the moving average, what happens? The bears try to sell it and the buyers buy it right back. Every time it goes below the moving average, the bears try to sell it and the buyers buy it right back up. Bears try to sell it, buyers buy it back up. Bears try to sell it. Beautiful failure set up there, right? Bears try to sell it, and yes, the buyers buy it right back up. In my world, the short-term momentum has nothing to do with higher highs and higher lows. It is everything to do with how the market is responding to the moving average. Now, you could also easily say, well, wait a second. Every time it went up, they sold it back down again, right? Went up, they sold it back down again. You're exactly right. Right? You're definitely right. There are bears that are waiting right above these highs here, right? They are waiting in the wing here. They're waiting to sell the sucker right back down again. So here's the trick, right? You got to get into this thing long in an area where the sellers don't want to go, right? Think about this, for example. Okay, here we have an overall bear market. Okay, overall bear market. Where do sellers want to sell? They want to sell high, right? And we identified this range last night. I don't think it's that important anymore, right? But look what happened. Every time it went up, they sold it, right? They sold it. Bears want to sell high. Where do sellers not want to sell? They don't want to sell low. So that's exactly where we want to focus on our buying opportunities for tomorrow. If you want to be a seller, I think you're a little bit on the wrong side of this right now. I may change my tune tomorrow if things change. But as of right now, though, I think you've got to be very careful being a seller trying to chase it lower, because every time it goes lower, right, they're popping it right back up. And again, that's the big clue I see in this chart right now. I also think, though, if you're a buyer, you really got to be careful being a buyer at these highs. In fact, we spent a lot of time today in our trade room talking about, okay, going up, stay away from the buy side. Brings it back down, buy the low, right? Goes up, stay away. Comes back down, buy the low, right? And keep on taking little nibbles, right, off of this chart. So we know the buyers have control. We know the buyers have to focus on buying low because of all of those sellers waiting here, right, as the market goes higher. Knowing this, most important technical clue, falling resistance, rising support. What is that? It's a range. It is, right? It's a triangle. It's a range. So we just talked about this, right? When a market has a bullish tone to it and it ends the day in a range, what do? We look to buy below the range using what? Using failure patterns. And we've got to be very careful buying high unless we see what? We see those breakout patterns. At the same time, because we're bullish, I can sell off the high, very carefully, I might add, right? But remember, if I go lower here, I don't want to sell low down here, right? So we really got to be careful if the market drops. So now that you kind of know where my head's at here on the S&P, it's a little bit different than Nasdaq, so we'll break that down as well, right? Now you kind of know what we're dealing with. Bull market into a trading range. That's basically what it is. Right? Stay away from buying high, buy low. And what I always want to see is I always want to see this market now, right, run lower, fail, and then come right back up. So imagine now if that is your, right, imagine now that's your trading range. What's the best way to trade this? Now, there are two basic options I'm watching for right now, and it all has to do with how this market reacts here. First of all, for example, nice strong move down. The last couple times we saw a strong move down, what happened? They tried to sell it and they failed. Tried to sell it and they failed. Tried to sell it and they failed. I'm looking for the exact same setup here right now. My only problem I have, though, is you've got that trend line coming down. So if I take this as a simple failure pattern right now, it's probably not going to give me very good results, right? I've got a little bit of resistance here overhead, and this is one of the situations we talked about last night in the euro where you don't want to be buying in the middle of that range, right? I don't want to buy up here. So here's what I really need right now on this S&P. I need us to get a little bit lower on this chart. Then I can draw that trend line down, and I can use that trend line for my two-legged pullback going higher, right? That's going to be the ideal situation here for those bears, or for the bulls, I should say, right? Get away from this really tight area in here. Give me a chance to get out of here, because remember, this is where the sellers can't do very much, right? This is where the sellers have trouble down here. So if I can get into a position long where I know the sellers are struggling, and again, what I'll do is I'll draw that trend line over. I'll try to use that trend line, right, as my, what was it called again? Two-legged pullback pattern, right? I've got my one leg, I got my two leg, and I'm looking for it from there. Now, let's say, for example, though, we make a run back up into that range, right? Maybe it doesn't pull back here for us. If it runs back into that range, don't chase after it and watch for a trap, right? Watch for that trap. These are notorious. I love these setups, right? Trap patterns in and around ranges are fantastic if you don't want to be buying into resistance. Okay, we call those trap patterns, right below a prior swing. And the reason why you know you want to look for a trap because you know you got some levels coming down overhead. Okay, so again, I'm looking for a 1, 2, two-legged pullback, right? Up and over. Or if we don't get that next leg lower, if it goes up, find that trap, right? And we're looking to buy off that low. Okay, pretty easy there. Okay, so now that we know what we're looking for as the market goes lower here, again, want to see us down, up, and over and go. What if we go higher? Okay, the problem we have going higher is this puts us right into that area where we know we have sellers waiting in the wing. We know they're waiting there with their sell orders hanging out. Okay, we know they're waiting there, and we got to make sure we don't buy into it. Okay, so here are two different things you're watching for. Both of them, we need to see strength, right? We got to see strength. And just a strong move up is clearly not enough, right? We've got to go nice and strong going higher here. Now, if we go nice and strong, it all depends on how we respond up there to that measured move, right? Does this thing just blast higher here? If it does, I can look for a 1, a 2, and a 2-try breakout to be a buyer into those stops. Okay, same pattern we talked about earlier. Or do we get a 1, 2, 3 reversal? This would definitely be preferred. 1, 2, 3, right? Find that new channel, and we're buying off the low of that channel. So the bottom line is that because I can easily see sellers waiting up here, right, I've got to get through that area if I'm going to want to buy it. Okay, or make it easy on myself, get down right in this buy zone and buy it up from there. And again, we'll talk more about those specific entry patterns in the free course, and we'll do it together tomorrow, right, in our trade room. Now, what about being a seller right now? How do we sell in a bull market? Either we go up, and you can see a good example right here. We go up, the buyers try once, buyers try twice, sell it back down, okay? They're not always going to look look the same, obviously. Every example will be different. But as we go up here, right, you know you got sellers here. Right? You know you got sellers here. The problem is it's bullish. So we want to be a seller off the high, but we get a 1, we get a 2, and then we go down. Now here's the challenge. Okay, we have that trend line coming up. Okay, and that trend line's been a pretty big deal, right? That trend line's been a pretty big deal. If we get this run up here, what's the best type of pattern to avoid selling into support? A trap pattern, right? Trap patterns. So now what you want to look for is the crown reversal. The 1, the 2, and then trap high, right, to sell it back down. That's not going to be easy, right? That's not going to be easy. And this is one of the big reasons why I said earlier, I think the market's got some great potential tomorrow. Because if those sellers, right, if they can't get that set up, we might find ourselves, all the bears who are still holding positions back here and here and here, right, they may find themselves on the wrong side of this market, and this thing could really run higher. Now, how about a bear side right now, right? What if we go lower? How do we sell it down here? This is where things get really tricky. Because obviously, if I just see a 1, 2, 3 down, right, that's not going to do a very good job at solving that problem, right? I'm still dealing with the same basic concern that I'm selling relatively low. So guys, what's the best way to sell when I'm worried about selling into support? Trap patterns. Now, what would a trap look like down here? It'll probably do something like this. 1, 2, 3, run. You'll see this little shallow little pullback there, and look for traps just overhead, right? So the bottom line is you're going to want to grab that channel, right? Grab that channel, but make sure when you're looking for that entry, make sure you're getting some sort of trap high over there, because again, we already know we have all these, right, all those sellers taking their profit down there. We got to get as high as we can, right, as we see that market shift. You know, the bottom line is if we see a real strong leg going lower here, it's going to be pretty much a guarantee we get down to retest that low, I think, right? All we need now is find a good entry on it. So if we can get that move lower, I just want to chase after it. Again, traps, and we'll look for that sell back down from there. So that's the general idea. It's not going to be easy being a seller tomorrow on the S&P. It won't. There's 2 scenarios that both of them are really very challenging. And that's why I say tomorrow could be a good day for the bulls here, but we've got to wait and see what we get. Don't forget, if we get the 1, 2, 3 up, just stay patient. Find that new channel. We'll do it tomorrow together, obviously, right? And look for that pullback there as we go higher. If it makes the run lower here, though, be very, very careful here. And, oh, by the way, what would you look for to buy off that low, right? Could you buy that low? Yeah, crown reversal, right? So one leg lower, higher low, and then trap, right? That would be the pattern you want if you want to buy it, right? If you want to buy it. What I would do is I would look for a bounce off the low that allows me to draw a trend line off that low, right? And then once you've got that trend line in, that'll make it a whole lot more difficult for the bears to get involved. Then it's that trap right? And you're good to go back up to retest the high. That's a much more advanced pattern, obviously, and we'll talk a lot more about that in our membership course. But the most important thing right now is if you do want to buy after that strong move down, right, just try to get that trap on it, because traps will usually be your best bet, right, as you try to get this market up off of those lows. So S&P, a little bit tricky. Again, not very easy to thread the needle for a seller tomorrow, and that might just be our biggest clue here. But all we need now is those buy setups. Over on the Nasdaq. The Nasdaq is a much different scenario. It looks the same, it kind of smells the same, but there's one big clue, and that is we tumbled, we pulled back, and you can easily see here, let me get this thing back out here real quick here. There we go. Right, we tumbled, we go back, and we kind of bounced around inside this range here for really most of the morning's session. So anytime we have a range-bound market, what's the plan? The plan is I want to buy low, I want to sell high. But I talked about there's two very big clues right now in the Nasdaq, which I think is what's responsible for this sloppy price action. And the fact that the sellers really haven't been able to get anything to collapse back down again, right? Why do these buyers keep coming in and holding this thing? Probably because of this move last night and this move from earlier, right, in the session today. What do we always talk about? Anytime we see a strong move in one direction, what do we usually get? We usually get that second leg. At the very least, we would expect those buyers to retest that 7,700 big round number up at those highs. Same thing here. Strong move up, right? They haven't come back to retest that high yet. That's typically where you get the best trades. Okay, and I'll bet you have a lot of buyers who are going to keep buying this until they get that. You know, a good example back here, right? Strong move down. You expect to see a retest of that extreme, right? Strong move up. You're expecting to see a retest of that extreme, right? Strong move up, retest of the extreme. So the moral of the story is I definitely want to be a buyer right now, because I can see that we have a couple targets up here that haven't been achieved yet. It looks to me like the bears got what they wanted. Strong move down. They got what they wanted, and they, right, gave it up. Buyers are still trying to get what they want as well. So we know we want to be a buyer on this. I know I have a trading range at the beginning of the day. And again, you can see that's the big difference here between the S&P and the Nasdaq, right? The S&P doesn't have that, right? Here's back to the S&P, right? The S&P has got higher highs, higher lows. It's not a range. Right? It sure felt like a range at some points, right? But it's not a range. On the Nasdaq's definitely a range, right? We go running lower, up, right? And you can see how that little range there, that's the most important thing in this chart right now. Okay? I would say there's probably a neutral overall momentum. You know, I don't think we have the same type of bullish tone that we do on the S&P right now. But at the same time, though, I can easily see the buyers have two objectives that they still haven't completed. So I want to get into that. I want to be a part of that move. And what I'd like to do is use this range to buy low, right? And possibly here, once we get that move up, sell it back down again. So what's the best way to buy in a bull market below the low of a range, right? Just like we saw back here. We wait for the market to make the run lower. Let me scroll forward a little bit here for us, right? We wait for the market now to make that run lower. We grab that moving average, right? And we look for that failure, right? That one try, that two try, that failure pattern, right? And again, don't forget, I'm just illustrating these patterns for you. You'll learn all the details about these patterns in our membership classes, but I go over all the fundamentals of all the setups, right, inside that free trading course, right, which you'll learn all about, right? Grab that link in the upper right-hand corner or that big red button below the video tonight, right, here on the blog. So I want to get the market going lower. I want to see those bears try to sell off the moving average, and then looking to buy, right, into those stops. Now, the one thing you don't want to do is you don't want to get too greedy on this or too aggressive on this. Remember, you've got this trading range right here, right? So if I try to sell, let's say, for example, like this is a much different pattern, right? It's not going to be as effective because that pattern is right inside the range. I want to stay away from the range. I want to get below the range. I want to see us make a run going lower here. I want to draw that trend line down and then use that trend line now, right, as my level of support, two-legged pullback style. Okay, or I want to see us make that run lower, get that moving average coming over, let those bears try to sell off of it so I can buy into their stop losses, get that moving average coming over, right, and buy the pullback. Again, staying outside of that trading range. So those are three different patterns to look for. Again, stay away from that middle though. Right? Stay away from it. I think that's going to be the trickiest part here right now on the Nasdaq. As this thing tries to go lower, right, you'll probably see a lot of people trying to buy that pattern. And it might work, right? It might work, that 1-2 failure back up. It might work for all I know, but the reality is you're going right inside the range and you've got that falling resistance. It's just not a great high quality setup. The reason why it's not a very high quality setup is because there isn't a lot of profit potential baked into that trade. And where there isn't a lot of profit to be made, you're not going to be able to attract all the big money in the market, and that's not going to help your winning percentages. So the best thing I could do right now is wait for that next leg lower, get that failure, right, and buy off of that low. Now, what if we go higher here, right? Being a buyer as we go higher, it's almost identical to what we talked about on the oil, right, and the S&P. We first of all have to get that strong move up. If we get a strong move and this thing just tears, right, up to that measured move, 1, 2, and buying it, right? Again, if this thing just tears going higher here, right, bears try once, bears try twice, okay, I can take that now as a 2-try failure. Obviously, like I mentioned earlier, right, I want that 1, 2, 3. That would be the home run pattern, because then that gives me everything I need. Mark up those highs, mark up that high, bring it down to that low, right? And I'm looking to buy that pullback, right, off that hidden channel. The key here, though, is strength, right? That's the key. The key is strength. We've got to see a strong move up first, hold the pullback and go. Then I can be confident I look for that channel, or, right, I see that break up, that 1, that 2, and go from there. It's all about strength as we go. Now, we've covered the buy side. What about the sell side? The sell side here right now is a little bit more tricky, right? Because as we go higher here, you've definitely got that momentum just a little bit here to the bull side. What's the best pattern to sell off the high when the market is making higher highs and higher lows? The nested failure. We go up, the buyers try once, the buyers try twice, and we're down, right? Again, with that trend line coming in, you really got to make sure you get that trap, right? That trap set up. One of my 4 entry patterns, right, that we use every morning in our trade room. That trap set up off that high. Stay away from the middle of this little, right? Stay away from this area right here. Get down, buy it up, go up, sell it down. Okay, how do we sell as we go lower here? Very difficult, isn't it? Yes, very, very difficult to sell as we go lower. What was the plan? The plan was to look for that trap, right? You can see an example of this one right here. We go down, a little shallow pullback there, and what happens? You go up, and the bears are all waiting for it, right? They're all waiting to sell up there. See how the bears are waiting to sell that? That's the same thing you're looking for down here. Strong move down, a little shallow, right? Trap high, and that will be your sell. The key here is, right, it's got to be a very strong move down, though. Very, very strong move down, because you've literally got to tell those buyers, get the heck out of my way, and then give the sellers a chance then to sell above those highs. So just like the S&P, it's a little bit tricky right now to find a good short. It really is, right? As we go higher, you've got that trend line coming in, which may not give us a very easy spot to sell, right? If we're sitting right on top of that trend line, I cannot sell that. Right? And again, as we go lower, it becomes very difficult to sell down here. How would I buy down here? What if we run lower here? Right? We run lower again, looking for that failure, right? That failure, and back up into that trading range. So very difficult to be a bear right now on these markets. Okay? Not a whole lot easy to be a bull. Got to wait patiently, though, for those setups. And again, we'll do all this together tomorrow morning, right, in our trade room. Over on the gold, looking at gold here tonight. First things first, okay, go back in time here a bit. Strong bull move up into a trading range, right? Strong bull move up into a trading range. And you'll notice, obviously, right, they broke right through that high. Great example here. Strong move up, 1, 2. That 2-try breakout, right? Strong move up, 1, 2, 2-try breakout. But as you can see here, don't tell that to the buyers. The buyers, of course, completely collapsing right now, going back into that range. What do we know about a range? Buy low, sell high, avoid the middle. So we're obviously sitting right in the middle right now here on the gold. I don't want to be trading this area. Not a very good spot to be trading here on the gold. What I'd rather do is sell high and buy low, which reminds me, right, this strong move down. Okay, now that we know we have that strong momentum, right, price action basically just collapses back into that range. Anytime I see a strong move in one direction, we already know we're going to probably see a pullback and a second leg. Okay, anytime I see a strong move in one direction, we're going to probably see a pullback and a second leg. So now what I need to do is, because we're bearish, I want to find a level of resistance I can use. Okay, again, what's the best way to find resistance? Don't just draw a resistance trend line. That's not going to work very much, right? Draw a support trend line. Beautiful support trend line there. Up to that high, that creates a great level of resistance. So, again, if you want to find a good support level, think about a resistance level first. If you want to find a good resistance level, think about what support levels could I find, and then copy and paste them over, right, to find the opposite side. So in this case, I want to find resistance. I draw a support trend line, I bring it up, and that gives me resistance. So now I know where I can sell. And this goes right along with the plan, right? I've got my trading range. I want to sell, right, above the high. I want to buy off that low. So how would I sell this market if I can get the pullback? Pretty simple, right? Go up. The buyers will, right? The buyers obviously at that point will probably try to buy that pullback. Moving average comes over, right? Buyers, of course, they try to buy it. If they're successful, we'll call that what? A 1, 2, 3 breakout. We have a good plan for that. But if they're not successful, if they try and they struggle, now we know where stops are. We can sell right into those stop losses. And of course, don't chase after it, right? Sell outside the range. That's one thing you want to focus on this gold. It's a very narrow range, right? It's not a very large range. It's very narrow. It's very small here. And so you really want to try to stay outside of that trading range, because remember, when you trade inside of a narrow range, what's missing? Profit potential, right? There's not as much potential profit inside that range, which means what? You're not going to attract more traders. Where there's a big potential profit, you'll see a big long line of people lined up to get into that position. And when there's a lot of people lined up to get into that with you, you betcha, right? You're going to see a great result off that. So you always want to be looking for those trades that have potential for, right, a big profit, because where there's big profit, you'll attract the big fish. And when you're trading with the big fish, right, they tend to move these markets around, right, don't they? We always want to be trying to find those high reward opportunities, not just low risk, but high reward. So that's one of the big reasons why you want to be selling this, but selling it after the buyers fail, right? Let them try, let them fail, after the buyers fail, and then again, right, get above that trading range. Remember, what you don't want is you don't want this pattern. Right? You don't want that pattern, because what's that pattern going to do? Yeah, that pattern, the pattern may look good, but it's not a good location. Those will usually kick you out, right? Because again, you're selling right into the level of support there at the low of that range. So up high, buyers try to buy it, right? They fail, and we're selling back down again. And again, I'm just illustrating this. I've got hundreds of examples of these patterns inside that free course I mentioned earlier, linked up in the upper right-hand corner. All right, guys? Now, don't forget, if we get the 1, the 2, and the 3, perfect, great. Now I have no problem being a buyer, neither should you. I do not take it personally when the market doesn't do exactly what I want, neither should you, right? It doesn't know me, it doesn't care about me. I'm just the fly on the back of the elephant. If I see the elephant make a run for the highs here, right, I'm going to draw up that new hidden channel again, hidden channel drawing for lows there, and I'm buying off that pullback. Now, what does that pullback look like? If you were to take that pullback and kind of zoom in on this, right? Here's your trend line right there, right? We pull back, what's going to happen? The moving average comes over, the bears will try to sell it, and we're going to buy right into those failures, right? We're going to buy right into those stop losses. So think of that, right, as kind of the zooming in on that area, right? It pulls back, the moving average, right? Moving average comes over, right? And you're trying to get just below that moving average. Let those sellers try to take it lower there, right? And you're buying into their stops. We're not predicting the seller failure. We're allowing the seller failure, right? There's a big difference, right? Once those sellers show us their cards, then we know where our entries need to be to buy into their stop losses. We call those, that of course is the 1, 2, 3 breakout into a hidden channel with a failure setup, right, getting in to the trade long. Now, speaking of long sides, what if we do get this market running lower here? If the market keeps going lower, the biggest problem is going to be momentum, right? So if this thing keeps going lower here, and again, I zoom out here because I want to remind you we're at the low of a range here. So if this thing keeps going lower here, what's going to be the biggest hurdle for the buyers? The momentum. Momentum is way too bearish. And if you have a market, again, right, if we keep rolling lower here, or even if we go up and then straight down again, right, that's going to be one heck of a bear market. It's still a range, and until they hold that pullback, right, until they go lower, hold the pullback and go, I still want to be a buyer up here. So whether we go up and then down, or whether we go straight on down, doesn't matter to me. All I care about is that momentum. And because we have that bearish momentum going lower here, what's the best way to buy when the market is bearish? How many tries do we want to see from the sellers? They're probably not going to give up after the first try, right? The first try for the bears are probably not going to give up after that. What's going to happen? They're going to come in and try one more time, right? One more time. Let those bears try twice. Right? Let them try twice. Once we get them second try, right? Then running back up, right? Then running back up, right, into that trading range. We saw a great example of this earlier on in the week, right? We had that big drop, if you recall earlier this week, right, on Monday. That big drop earlier, right, gave the bears that edge. So what do? We wait for the 1, we wait for the 2, and we buy it back up, right? Because sellers are still going to wait there, right? They're going to still wait there. Good example here, right? We go back into the range. We're not so bearish this time around, right? There's a big difference between those two moves, right? Very strong momentum as we go lower, right? Not as strong, right? Maybe not weak momentum, but we definitely know we're more bullish in that second example than we were on the first example. Let them try twice, right? On the first example, all we need is a failure on that second example, right? And that's a good comparison there about how we use, as we mentioned earlier, right? It's not about the pattern, it's about the momentum before the pattern, right? How do you know which pattern to use? Momentum will tell you. Okay, so now we know as we go lower here that momentum is very bearish, 1, 2, and then up from there. Remember, buy low, sell high, avoid the middle, and keep an eye on the chart tomorrow morning. We got Asian markets. We've got that news from China tomorrow, and then into the U.S. session, we've got that PPI number tomorrow morning as well, or CPI, one of the I numbers, one of the indexes tomorrow at 8:30 Eastern Time, as we said earlier in the video. Last but not least here on the euro. Euro is very, very much untouched from earlier on this week. In fact, earlier on this month. Been a very slow go here on the euro. This is not a very slow time frame. It's only a 3,000 tick chart. It's not a very big time frame here. Strong bull market into a trading range. Okay, those trading ranges, they are toxic in the middle, right? So you want to avoid that middle, right? We talked about how difficult it is to trade the middle earlier. And the euro is trying to make our job very difficult right now. What I'm looking for here is, because we're bullish, I want to buy the low of the range. And if we go higher here, I need to see that breakout or that 1, 2, 3 breakout, right? 2 try breakout or that 1, 2 breakout. What I would kill for right now is a shot lower here. If I could get that shot lower, then we can use that failure off the moving average, right, into a pullback, and we can stay out of that middle, right? The problem is, all we've seen so far this week on the euro is this kind of this crummy little failure pattern right there, and the only way to really trade it is to trade right in the middle, right? That's the pattern you want to avoid. You know, I know it's tough right now because we're not getting a lot of price action in the euro right now, but that's not going to last forever. It's only temporary, right? The markets go through these seasons. When they're like this, just let them do their thing. There are plenty of other markets we can trade every day, so don't force it, right? Bottom line is, I want to see it go. Get out of this range, right? Get away from it. That way, there's a big potential profit, because where there is potential profit, right, you know you can increase, right, your winning percentages. So I don't want to trade the small failure right inside the range. I want to get down, get those bears to try to sell off, right, the moving average, failure into pullback, and then back up. What if we go higher here, right? As we go higher, and again, right, stay out of this range. Stay out of the range. What if we go higher here? The good news is that we get quite a bit of room up to that measured move. Okay, the measured move we assume is the big objective, 13,000 to be a big milestone from there. So really at this point, it's going to be a strong move up, 1, 2, and go. That obviously is the most aggressive one, which means you need to have a strong push up, then wait for the 1, wait for the 2, and then we look for the buy, again, into those stops. Or we see a 1, 2, 3, don't chase after it, mark up that swing. Anytime we have a strong move in one direction, we're going to probably see a pullback and a second low. So if we do see that 1, 2, 3 breakout, find that pullback area, look for that pullback area right at the sweet spot, the prior high, the low of that hidden channel. And again, if you were to kind of zoom in on that area, right, it would be a pullback, right? Sellers, of course, are going to try to sell off it. We're buying into their failure, and we can buy that pullback, right, as we go. So imagine that's what that kind of zoomed in will look like, right, as we go. Failure pattern, right, bear failure below the moving average, and then bull breakout, pullback, back up above that moving average. All right, guys? So euro looks great. We just got to see some more volume tomorrow. That's kind of the name of the game right now on that euro. Again, over on the gold, right, looking for that next leg lower or possibly that next leg higher. On the E-minis, don't forget on the E-minis, very difficult to be a seller right now. Okay, one easy problem for tomorrow, or one easy trap to get into tomorrow is trying to force these short side trades on the E-mini S&P and the Nasdaq. Much, much better for us now, right? Again, stay away from that resistance, get this move down and back up, right? So we can keep buying that low where the sellers, right, are where we are protected, right, against those sellers. And of course, over on the oil bull market into a range, right? We know the plan. I want to buy that pullback, right, on the oil market here for tomorrow. Boy, oh boy, great video tonight. Great newsletter. We are locked and loaded for tomorrow's trading session. We're waiting on Asia. How will the markets respond to the inflation reports coming out in Asia overnight, right? What will the markets look like tomorrow when we open up at 8 o'clock Eastern time? And that reminds me, right? We do this together every morning in our trade room. We open up Monday through Friday at 8 o'clock Eastern time. We prep the charts overnight. When we execute that 3-step strategy together every morning, that way you can make sure you're doing it the right way, right along with us. You know, we all know, like I mentioned earlier, we all know there's life-changing money to be made every morning at the opening bell. The problem is the markets aren't always easy, right? I have a very simple trading strategy, but it takes a little bit of experience until you see all the puzzle pieces correctly. That's why our trade room is such an important part of our advanced membership classes. So don't forget, tomorrow morning, hope I'll see you there tomorrow at 8 o'clock Eastern time. Grab the advanced course. It's right below the video tonight on our website here at schooloftrade.com. I'll put all the links in the description of the YouTube video. And if you're not quite ready for membership yet, don't forget, right to the left of my ugly mug, you'll find that big free trial button. The free trial includes your free pass for the trade room as well as your free trading course. So if we don't see you tomorrow morning and the trade was a client, make sure you grab that free trial. Make sure you grab that free course. And don't forget, I am always standing by. Phone, email, Skype. We got live support down here in the lower right-hand corner. I'm always here to help you guys out if you have any questions along the way. Hope you had a great day out there. Thank you so much for tuning in here every evening on this nightly newsletter. We are just scratching the surface, though. We're going to get at it tomorrow morning. I hope to see you there with me. If not, we'll do it again tomorrow evening. Same time, same place. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.